What's going on, guys? Welcome back to another inter-equity video. Today is going to be a gold one. All right. We have been getting a ton of comments in our previous videos about making one about the daily bias. Everyone likes to complicate the daily bias. Today, I'm going to simplify it as much as possible. We are only going to be using liquidity and determining where price can head throughout the day. All right, so here we are on the daily time frame on gold. I simply marked out previous high and previous low of the previous day. So in this example, Wednesday's high, Wednesday's low, and we're going to be looking to trade Thursday's price action. Okay, when I hop on the charts every single morning, I just want to have a good idea of what the previous day did, because it can help you understand what the following day is going to do. So in this example, Thursday's price action. Let's open this price action up to the 1 hour time frame, and what can we see? So Wednesday, we have to dissect this move that occurred on Wednesday. We had a big sell-off to the downside, okay? Now, what was the purpose of that sell-off? If I grab these lows on the left-hand side, hopefully this makes more sense, but buyers were entering positions in these levels here, okay, above these lows. So Wednesday, big sell-off to trap the buyers. Automatically in my head, I gotta think it's the following day now. Let's target the highs back to the upside. Okay, so Wednesday, trap move down. Thursday, correct move back up to the upside. Now we have to start pairing this with liquidity. And I don't want to overcomplicate this, okay? I want to keep it as simple as possible for you guys. Wednesday, we sold off in London. Okay, I have the Wednesday high marked out right here. We want to understand why the sell-off occurred. Okay, where did it stem from? Where did it come from? Now, look to the left-hand side over here. If I draw this on, we sold off from these highs over here. Now, I understand that's not how the market operates. We need to run liquidity in order to move the other way. And in this instance, the market respected liquidity and moved the other way. So that tells me that this move from high to low is a trap move to the downside, okay? And I want to be buying this price action back up. Okay, so if there was buying opportunities in London, cool. You want to look for that buy and hold it to that daily high and the high from the left-hand side, okay? And in my situation, I only trade New York session. So what do I want to see in New York in order to target this high? Again, I want to keep this as simple as possible for you guys. I want to be able to identify a low that we're building liquidity at. So if I just draw this out for you guys, think about it for a moment. A lot of people maybe will mark this low out, or maybe even this low. No, this is all wrong. Where did the liquidity start building at? This low right here. Okay, so we want to see this low taken out, all right? And then once we take that low out, that liquidity out, we can target these highs to the upside, okay? But this is what we want to be looking for. Inducing early buyers, wait for them to get trapped, and then trade the other way. So now we're here on the 1 minute chart looking at gold. This is 8 a.m., okay? So we are at New York Open, and I'll speed up price action here a little bit so we can get a good idea of what's going on. All right, so we get a bullish move to the upside, okay? And then we start ranging. I'm gonna pause it in a moment here. Okay, cool. Let's leave it here and break down this price action. So based off what I just showed you guys on the diagram, understanding how to find and how to identify where liquidity is, very, very simple. Look at this. I'm gonna draw one box, and hopefully this is starting to train your eyes more and more and more. Look how we stabbed into this area once, 2, 3, 4, and even had another move to the upside, okay? Inducing buyers into the market. So since we had that move to the upside, where do you think buyers are gonna be entering again? Simple, straightforward, from this low. But we understand now that liquidity is gonna be below this low. So in order for us to match that higher time frame move, that daily bias, we need to buy below these lows, target Wednesday high, but not only Wednesday high, remember where that move came from. This high from the left-hand side, 3328. Okay, so we end up ranging a little bit longer. Check this out. For a total of over 2 hours. 2 hours we ranged in here, building so much early buyer liquidity, okay? This is when patience and discipline is very, very important. We only want to buy below this low, period. That's it. It's as simple as that, guys. There's no ifs, ands, or buts. It's a strict plan. It's a strict rule. We want to buy below 3307, okay? Now, how do we enter? That's what everybody always wants to know, right? Very simple. We need to identify a level that doesn't have liquidity anymore. And look what happens right below here. This was right before New York Open. We took out this high. then had a sell-off to the downside. Okay, the sell-off did what? Trapped buyers. So I'm now going to view this low as a low that does not have liquidity. I can mark out this whole area, okay? And we can look to take positions as soon as we tap into this area. Stop has to always remain below this low, okay? That never changes. We're going to target back the highs. As simple as that, okay? Don't need to overcomplicate anything. Price sells off. Doesn't tag us in yet. We get a false reaction up. Check this out. BOS to upside, which tells me buyers are entering positions and they're going to have stop losses below this low. So wait to see them get taken out of the market. They get trapped. We get tagged in. So notice how all the early traders are trapped and now we are in our position. We're going to go to the 5-minute time frame and align that with our daily bias. Again, we use the lower time frame for entry, higher time frame for daily bias. Okay? And then again, we're going to be targeting daily high and that high from the left. Check this out. And just like that, we hunt that previous daily high. Not only that high, again, we're not just buying below daily lows and targeting daily highs. No, we need to understand where liquidity is. And that matched up with that daily to daily in this example, this high from the left-hand side. All right, guys, thanks for watching. I hope you guys enjoyed this video on daily bias. And I hope you're starting to see that all these other videos that overcomplicate things, it's just too much. We like to keep it as simple as possible here at InterEquity. We focus on liquidity on every time frame from 1 minute all the way up to the weekly. It's all fractal. So if you guys enjoyed this video, like, comment, subscribe, turn your notifications on, and we'll see you soon.